All right. Good morning, everybody. So the futures are down, but they're not down as much as we would have expected, due to the. Seems like they'd already priced in a lot of this move ahead of time. So we did drop down around the next cog level, which we'll get into. Right now, I'm on Bloomberg 5 things you need to know. It's that free source of information in the morning, kind of get you started on a little bit of a review of what happened in the overnight hours. This is a really good email. It's free. Doesn't cost you anything to go over and sign up and get that. We've got a lot of Fed officials talking today. We've got quite a bit of economic news coming out as well. And then there are additional meetings. Looks like over in the EU, there's going to be like a UN council meeting, and it's going to be something to definitely keep your eye on through the day. To be able to keep your eye on that, I've been kind of recommending people use Finance Juice. This also is another free source. Just remember, you get what you pay for. One thing that I would recommend is use the gear icon and go in and turn off some of the news sources that perhaps you don't like or don't want, or you believe are kind of maybe a little bit biased, or just maybe just the fluff stuff. Right? CNBC is in there for an example. Maybe you want to turn that off. A couple other, just dial it in a little bit. But throughout the day, when you have a particular official speaking, once that person starts speaking, you'll start seeing a lot of posts from them, right? So even if you don't know exactly who's talking at the time, this is a quick little way to get some grasp on that. Commodities are moving significantly, and precious metals made a really nice move in the overnight hours. Oil as well. Keep your eye on the food prices. It's going to be a really big deal. I know it may not seem like it yet, but it will. It's going to become a really big deal within the next few weeks. Bitcoin got whacked really hard last night. Now it's so new in its current state, with all these banks and lending institutions now actually participating in Bitcoin. There's now a nation that uses that for its national currency. The effects of the drop in Bitcoin, we don't know how that's going to affect markets around the world. The FX markets, the rest of the world, we just don't know. So definitely want to keep your eye on Bitcoin. We're in kind of uncharted territories when it comes to that. So on the agenda today, you can see we have a number of anticipated impact, high impact events on the agenda for today. I would say probably all of these today are going to be highly impactful rather than just their historic impact. If you want a little bit of perspective of what's going on around the world, Russia's stock market lost apparently half of its entire marketplace. But they're not the only ones that are down hard. You can go in and to something like TD Ameritrade. Schwab has this, Fidelity has it, IBKR, all the big brokers have some sort of global equities perspective. Took a significant breach around the world in the marketplace. This is what IBD refers to as a damaged chart, right? It's going to take a long time for our charts to heal themselves. And this is the complication that a lot of newer traders face. You're trying to perform technical analysis on a marketplace that's damaged, and you can't perform technical analysis on a damaged marketplace. So then the new trader thinks, well, I just don't know how to do it, or I must be doing it wrong, when in reality you can't. It's taught in every CMT certification manual around the world. You want to go get your chartered license, you'll realize you can't perform technical analysis on broken charts. right? You have to look at other places to identify structural levels and reversal spots and things like that. So it's going to take quite a while for these charts to heal. In the meantime, we'll just have to play the other way around, right? More of a pivot style based on structure. Look for critical levels from uh, previous price action. So bring it over to Market Watch. I like using this one more than any of the others. If yours is full, shows a bunch of junk like this, need to clean it up. Just hit the show all and turn everything off, and then hit Econo Day event. That'll bring it up. The description is not normally next to the time frame, but I like to just grab that and drag it over so that everything is just nice and neat in one little spot. Almost every hour on the hour, we have economic events today. And what is missing from this is we've got a lot of uh, Fed officials talking today. So be on the lookout for them too. I think it's going to be in the later part of the day, but I don't know for sure because I haven't caught their schedule yet. These additional auctions are absolutely critical, by the way, so definitely keep your eye on the clock. Don't think that these aren't as important. They're absolutely important. So at 11:30 and at 1 o'clock today, be very cautious of the marketplace. In the overnight hours, the VIX crossed into a significant level, and it's important to understand the effects of the VIX. It's not just some random little fear gauge, right? It goes so much more beyond that. When it comes to the VIX, the VIX is nothing more than a mathematical formula based on the SPX options 30 days out and how much they're traded. I don't want to get down into the weeds and nerd out on VIX, but really think about what I just said. The VIX looks at the SPX options 30 days out and sees how much they're traded. That's the VIX, right? So it's not a very useful gauge of what's going on out there. And the algos don't use that. They use the VIX futures. And almost every other product that is a VIX product uses the VIX futures. So when it comes to the VIX futures, make no mistake about it. When this marketplace starts breaking above 30 and into 35, we're getting into extreme levels of VIX, and it changes the game in the options marketplace. It changes everything. So if you're going to be day trading options, you're going to find it difficult to find decent spreads. You're going to find it really difficult to get fills. We're talking about something as clean and easy to trade as SPY. The price ratio is going to be astronomical. And should we rally up off of these lows in this morning's session, they will strip this VIX out really fast. And you're going to see the value of those calls drop by half at least. Right. And this is really important if you're going to be day trading today and grabbing something like SPY and QQQ. If we start rallying up off of these lows and you buy calls, look at the price of those calls right now. 4 days out at the money call, $1,300. Take that number and cut it in half because it's going to lose at least that much from the volatility crush on the way up. Will your call make money? Sure, you're going to make a little bit of money, but you're going to get vol stripped so hard that it's not going to be worth the risk. So if you're going to be day trading in options today for a rally to the upside, use a spread. Even if you're not normally a spread trader, maybe you think they're a little confusing. Put one in the money, put one out of the money. There's a spread, right? It's as simple as that. Now, these prices aren't accurate because the market's not open yet. But by using a spread, you can neutralize your theta decay. You can neutralize your impact from the Greeks, right? Because you're buying a Greek, you're selling a Greek. They're going to counter each other out for the most part. It's not perfect, but you will avoid getting volatility crush, and you will take volatility crush. It's going to be a very difficult thing to make money in for a long trade. Now, on the put side, there's no reason to do a spread, right? You want that volatility. So if we dump lower, right, it's going to spike the VIX even higher. Those puts are going to swell even more. So you don't need a spread. You don't want to stop those from swelling. You want to embrace it, get more of it. So one way you can get more of it is don't be in the money. Get right at the money, maybe a little out of the money if you're going to trade puts and take this thing lower down. and just run them naked. There's absolutely no reason to turn it into a spread other than the fact that they're expensive in value, right? Went on a tangent. Anyways, watch the VIX today. No kidding. It is going to be absolutely critical for everything that we're doing in the next few weeks, right? Or at least until this thing gets back below 30. There is dynamic hedging going on in the marketplace. This is really important when we start thinking about things like the SPX and the ES. So they don't trade the way we do, and they don't trade the why that we do, right? The why for us is, well, I want to buy it here and I'm going to get out there because I think it's going to move up or down X amount of points. We get in because of support and resistance. We get in because of momentum or trend. They create the momentum, right? It's kind of like the old phrase, is it going to rain today? I don't know. Let me check the weather. They don't care if it's going to rain. They're the rain makers. They make it rain, right? They don't need an umbrella. If we look at where the expected move is for the week, I know I've got a lot of lines on, so it may seem a little difficult to grasp where that is. This was the expected move. This is how far we were expected to move in the next 4 days. We are outside of that box. A one standard deviation move outside of that box. The next piece is very important. If we go any lower than our current low, if we break 4,100, the algos are going to sell into the drop. They have to, because they need to get back to zero in their dynamic hedging, right? So the only way that they can get back to zero is to hedge. Now, we're not talking about hedging in the ES. They're going to use the ES to hedge, right? They're carrying Apple, they're carrying Microsoft, Facebook, whatever they're carrying. They've got millions and millions, billions of dollars. BlackRock alone has $9 billion worth of Apple. They're going to protect those assets by hedging. The way that they hedge is sell into selling. So the more this falls, the more they sell to get to delta neutral. Of course, their selling causes us to fall even more. And then the more we fall, the more they sell. And it creates a volatility box. Now, the good thing is it ends at the end of the week. Every week they reset their positioning. Thank goodness, right? Because when it gets out of control, and it has gotten out of control, you can see it in the charts. Go back to October, November, and December of 2018 when we got into that volatility box. When it gets out of control, it gets very out of control. And this can drive markets to lows really fast. The algos don't know any better. It's just a machine that's told what to do. The cog lines are in play. Absolutely want to use those. It doesn't matter if you understand what they are. You can identify where they are very easily. It's at the 11s, and it's only on the ES. 4111, 4211, 4311, 4011. So keep your eye on the cog lines. You can see that we're interacting with one right now, right at the 4111. You think it's just some random number that price just happened to stop there? Nah. I'm good, but I'm not that good. For the day, we're going to actually be looking to see this reciprocate back to the upside and or at the very least hold these lows. Now, when we're talking about holding a level, high side or low side, price is expected to expand a little bit farther than it expanded before, right? So we set a low here. We didn't just come down and match the equal low. We went lower than that previous low. That's what we expect it to do. We now have a new low right around that 4,100. It held, right? We didn't hit it. It held. Persistence beats resistance. We keep knocking on the door. We keep kicking it. We're going to break through it. That's the line in the sand. A trade to play right now would be buying things that buying puts on the expectation that if you're wrong, you can sell puts and let price rally back up against you. It's a good way to go. By buying puts, you're carrying a hedge that says, I think we're going to go to the downside and that it's going to get worse from here. But the good thing about that is when you're buying those puts, if you're wrong, you have something to trade in all of this mess that a lot of other people don't have anything to trade. You don't have to worry about momentum, trend. You don't have to worry about anything else other than prices rising up and you can sell puts against it. It makes for a nice, laid back, easy trade. For any of those who sold puts, when I posted a sell for the MES puts, our strike is the 4,000. Yeah, it's not underwater yet, but the P&L looks really negative. It's kind of scary looking. Don't close this as a loser. By any stretch of the imagination, it's not a losing trade. The P&L might freak you out a little bit, but it's not a loser. Even if price gets to 4,000, it's not a loser. It has 113 days left to expiration. Between now and the next 113 days, we can roll this trade. We can see price rally back up. We can see a lot of things other than just taking a loss that we didn't need to take. So don't close that put. For the Nasdaq, it's a little worse than the ES. We've got an ADR of 3.5, and we've already moved 3.3. Um, we've got an additional market maker move of 2%. So we're looking at around 5.5, 5.75%. That would not be considered unusual. There are lock limits for futures. If you're new to futures and you haven't seen one, if this market is to move say 7.25%, then it will trigger lock limits and shut the market down. Then it'll open back up and see another movement to X amount of percent and shut the market down again. It's not based on the close or where we opened in the Globex. It's actually based on a time frame in the later part of yesterday afternoon. You can go in and read the prospectus on futures to understand more about lock limits. But if we start getting near 5.5% to the downside, there will be articles coming out. It'll be on like Bloomberg, Wall Street Journal, probably in Finance Juice, that will give you the calculated levels of where the break even is for lock limit. So don't think you have to go in there and get it all figured out. It will be posted. Once they see that we're getting close to lock limit triggers, an article will come out somewhere giving you those numbers. Really looking for a reciprocation, but I don't think it's going to happen today, right? Shock and all fear, the market's going to let this kind of settle out a little bit. And as long as the algos don't sell us down into oblivion, we're going to be expecting this to hold the range. If we can hold the range, maintain the level, we're very likely to start to see the markets ease back up off of these lows, right? Fear only lasts for a little while when it's the unknown, but it's not unknown anymore. We're no longer waiting for Russia to invade. They did invade. We're no longer waiting for a war to happen. We are at war, right? So we've actually removed a lot of the unknowns. The more unknowns that we remove, the more likely it is to see this market start to move back up again. We got the S&P 500 here. Change it to pre-market change percent. Use the filter because we don't really want 500 names. 111 is close enough. Give it a color adjustment. We're in a risk off environment, not much of a surprise. Oil's doing good, and so are precious metals. Everything else is getting whacked. A little bit of transportation, but I wouldn't expect that to stick. There's not going to be a lot of safe places to go to today when we're looking at sectors. You're going to definitely want to lean into your stock picks. Speaking of stock picks, I didn't activate Alpha Protocol yesterday, but if I had, it would have been an amazing outcome, right? And the reason I didn't is because it was news based. But Alpha Protocol is designed on the idea that when we rip really hard and fast to the upside or the downside, the markets correlate with an 85 to 90%. That means everything is moving in one direction. So rather than being a stock picker and going in and picking one or two names on the list, you pick every name on the list, right? So here's my Alpha Protocol list. Just kind of glance through these names with these numbers behind it. 6% moves, 3% moves, 2% moves. Sure, some of them only moved 1.5, 2%. Some of them didn't drop, right? So you may have been challenged on a few names. Otherwise, you would have been in every single one of these if you were running some sort of protocol system like this. Most retailers don't do this, but every single institution out there does that. And I'm putting one together because I don't think that they should be the only ones to have all the fun. The idea behind that is you don't have to try to go in and pick one. When we're in a highly correlated state, everything goes in the same direction. Don't bother being picky and taking your time. Use what Tasty Trades talks about and get aggressive. They went into that conversation with the aggressive contrarian trade strategy. that you're better off just getting in the damn thing rather than trying to be particular and picky about what strikes you pick and trying to get a really good pricing model and all of that. You just get in. So using their conversation and tying it into something like that, develop a trade list that kind of runs on the same principle. If everything was to go down or everything was to go up, what strikes would you pick? NASDAQ 100, pre-market change percent. We don't need a filter because we've already got 100 names. Maybe give it a color adjustment. A few names kind of stand out, not very many, right? Healthcare. I expect to see a run on utilities and healthcare and those quote defensive markets. Expecting to see, redemptions on those. So I wouldn't try to lean into them for any kind of safe haven. Everybody did pile into gold and silver. So for a safe haven asset, if you weren't already in it, it's a little too late. You're going to be getting in at the nosebleed sections, and it's very likely to just roll over from there. So how many names in the S&P are down at least a half of a percent? 87% of the S&P is down this morning, at least a half of a percent. So we'll get a little more aggressive and say, well, how many of the S&P are down at least 1%? 80% of the S&P is down 1%. That's the highly correlated state that I was just talking about. Right? And this is where a market becomes very dangerous. When everything correlates and synchronizes, it doesn't take very much to move the market. And the algos have no other job except to work into whatever it is. So if it's low, it's going lower. And if it's up, it's going higher. It won't run any counter or contrarian trades. That's a good thing for you, by the way, because the machine can't catch reversals like that. For the NASDAQ, how many names are down at least 1%? 75. 75% of the NASDAQ is down this morning, 1%. Should we continue to sell into the selling and you don't feel comfortable buying puts at the lows? I totally understand. I talk to people about this all the time. Who wants to buy at the lows to go lower? We want a pullback. You may not get a pullback, and you may have to just go ahead and buy at the lows to see it go lower. But keep in mind, you can sell a put against it if it starts to rally, right? So, say we come into the open, the market starts to fall, you buy a put, and then it reverses on you and just starts ripping to the upside. Sell a put. Sell a put against the one that you bought. Don't just eat the loss and think, well, I should have bought calls, right? I wouldn't try to take it from the lows, though. If we're already down 1% or more, look for some form of linear regression or mean reversion first. But I'm a cautious trader who's always looking for risk. If you're maybe not so cautious and want to just go ahead and get in there, all right. If you are going to look for reversals to the upside this morning, look for the ones that have fallen the most, right? You can see the car names are in there, the EV market, NIO, LCID. Pick the names that have fallen the most if you're looking for an upside rally this morning, not the names that have fallen the least, right? Because linear regression alone will be on your side to help give you a boost back in the other direction. That's what I got for you guys. Be careful, be safe, and I will see you all tomorrow.